Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 22nd of March. All right, a little bit later than usual, but pretty good timing because there's a few things kicking off. Now, we've just had a short while ago, Euros is taking a bit of a beating on the downside. The market manufacturing flash PMI numbers out of Germany, much weaker than expected, and that's seen, well, Euro, from everything I've seen across the board, this is a bit of a, just trying to find some news, where Euro has sort of dipped from sort of 113.80 down to under 113, the figure. So this is pretty interesting as we go into, into that European session. Just shows you how volatile that the market is at the moment. And this is one other thing I want to highlight. Just check out the price action. I mean, the Fed, I mentioned it in the 247 trade down the other day. The Fed statement was dovish, more dovish than previously, but it wasn't a dovish statement, right? There was no talk about cutting rates or anything like that. So we had those knee-jerk reactions in all the major pairs where they've all shot to the downside. The market was selling dollars across the board. Dollar CAD was actually going sideways. Dollar yen sort of corrected lower. Now, once again, a change in sentiment. We've had a bit of a mixed sentiment here across the board, and you can see how all these charts are left like all over the place. Right, it's a bit of a dog's breakfast, and you come back to the dollar index, and once again, look at this chart here. It's been chopped up both ways. You've now got a new sort of top. This previous support line is no longer there, and we've got a support line down the bottom. So anyway, the dollar looks like it's going to have a bit of a charge into the end of the week, which is going to set us up for a pretty interesting European session, especially after the EU have also given the UK until the 12th of March. They've extended the Brexit to try and get a deal through till the 12th of March. Okay, so what does that do for sterling? Well, probably not much because it's a little bit all over the shop, but we have to sort of wait and see how that plays out. But they've just given them 2 extra weeks. Takes a little bit of pressure off them at the moment. So make sure you keep an eye on that. Now, the dollar, well, it's rallying across the board. It's rallying against the Chinese yuan. The index itself is running, and I think we're going to see downward pressure on the euro because this data, right? This European data, the German data, it is the most important aspect of the European market. Now, the data's been pretty dormant for some time, but this is the lowest data for the manufacturing PMI since December 2012, right? 7-8 years. Going into that sort of level of data, 7 years, I should be able to say. So just keep an eye on that. It is causing a reaction. You think it'll bounce a little bit, but downward pressure here to stay. Now, let's just have a look what we've got to look forward to. Now, as far as economic numbers, you can just see up here on the screen where, well, the only thing really coming out is the Canadian CPI and retail sales data. So this is going to be really interesting as we get going. The dollar is, it's doing a little bit of a mixed tap dance on dollar CAD, but it's the only data we've really got to play with. Now, you come back into trading conditions. Well, I can tell you half an hour ago, everything was sideways, but at the moment, euro is the core driver. Now, most of these pairs, dollar yen, the dollar index, dollar CAD, dollar Swiss, sterling, Aussie and Kiwi are starting to run with euro. Euro is the only pair with downward momentum just at the moment. And as I said, it's a knee-jerk reaction to those German numbers. Now, just keep an eye on the core market drivers, which are still geopolitical events. And that is, an ongoing issue for us. We're waiting for that resolve. We do, as I said, have 2 extra weeks to wait for see if the UK can sort out their crap. All right, so CPI numbers today. It's a big release. It's very important for the Bank of Canada. Now, with this release, though, because this is just one big number, even though it's a very important one, you can trade the numbers straight after the release. If there was multiple releases, well, then that would be a different case. But the CPI stands out alone by itself, and that's the major data going forward. But you know what? When you compare the opportunity with come down here to what dollar CAD is actually doing, it's not exactly an easy opportunity. Let me just clear that screen. If you come up here, you try and connect the dots. And what I'm talking about is connecting the technicals with the fundamentals. This thing's trading sideways, so it could potentially go anywhere, right? The CPI data is hugely important for the interest rate outlook, so keep an eye on that. It's going to be very loose, and try and keep it together. All right, guys, that's it from me. Just a bit of an update as well. We'll have all the new EAs available, trade execution EAs available on Monday. Okay, we're just going to set up the videos and show you how to use these things. It's a lot cleaner than the old ones, that's for sure. All right, guys, have a good weekend. If I don't speak to you, cheerio and all the very best.